What's going to happen to the majority of homeowners out there when forbearance ends, when the end comes to the eviction and foreclosure moratoriums? A lot of people believe that you're going to see a massive wave of foreclosures come to the market. You're going to see this huge increase in supply. And it's just going to be turmoil, right? You're going to see a huge decline in home prices, and it's going to change the whole market dynamic, potentially lead to a market crash. Now, I've been on the other side of this since the very beginning, telling you that we're going to have a very, very strong housing market. And this week, we got the most recent report from Corelogic on their equity report from the first quarter of 2021. It shows that the average homeowner gained almost $33,000 in equity from the first quarter of 2020 to the first quarter of 2021. At the same time, 1.9 trillion in equity was gained in the first quarter of 2021 alone. Why am I telling you this? Because this is protection. Those homeowners out there, those people that own properties have equity in their property, and it's continuing to increase as home values go up. As we see appreciation rise, that means people are gaining more and more equity in their homes. And that is going to be the protection that's going to save the housing market if something were to happen. Today's video, we're going to take a look at a couple of these charts. We're going to talk about, which areas are doing the best with regards to the amount of home equity, which areas, states aren't doing the best. We're going to take a look at which states actually have the largest majority of negative equity in homes. What is negative equity? That's when somebody owes more on their house than it's worth. So in that case, those people would be in a position where they would have to short sell their properties and or be in a position where they would have to come up with money in order to sell their property. Now, a lot of people out there don't have the funds to do that. And that's why, a lot of viewers, a lot of people reach out to me and say, hey, if things do go sideways, this is going to be the straw that breaks the camel's back. These people don't have equity in their homes. Yeah, understood. The large majority of people do have equity in their homes. Nearly 50% of homeowners out there who have mortgages on their homes have at least 20% equity in their homes. And it's less than 7-8% of homeowners out there who have mortgages actually have less than 10% equity on their homes. And a small percentage, just over 1.5% of people actually owe 125%. So they actually owe quite a bit more on the home than it's worth. But that's not the consensus across the board. The large majority of people have equity in their homes. And that's going to be the protection to help a lot of people if they're in a position when forbearance ends, if they can't come up with a resolution with their lender through the loss mitigation process to continue making their payments. They have equity in their property. They're going to be in a position to sell those homes. At the same time, you've got the foreclosure moratorium ending. People that haven't made their payments, people that aren't in forbearance, those people also have to make a decision. Are they going to stay in their property and just lose that equity? Or are they going to sell the property, take that money, cash in hand, and try to move on and do something else? That's what I think is going to happen because people, want cash, right? They don't want to just let it dwindle in a property. This is completely different than what we saw in 2008, because in 2008, people were underwater on their homes. The large majority of people owed more on their homes than it was worth. And at the same time, those people had adjustable rate mortgages. The mortgages were changing. They were going from interest only to fully amortized payments. And with the change in payment, these people couldn't, take that hit with a higher payment. And at the same time, they owed more than it was worth. So they said, screw it. I'm just going to let it go. Why am I going to throw good money after bad? The difference now is that people have low fixed payments in most cases. And so they're in a position where, they have a 30-year fix. Their payment's not going to adjust. So at some point, if the home is worth less than they owe on it, their payment still stays the same. So, if they continue to hold that property, chances are equity would regain at some point in the future and they would be fine. I think you're going to have less people backing out of their properties because they're in a better position financially. In many cases, people their mortgage payment is cheaper than it would be to rent. It's less expensive than it would be to rent in most areas. And so they're in a better position financially by keeping, continuing to make that payment. But let's take a look at here at the most recent equity report, which states actually have the most equity. As you can see here, California leading the charge, nearly 70,000 per household with regards to the amount of equity shared across the board with regard to homeowners. And then you have some other states, Louisiana, who is on the other side of the coin, right? A lot less equity. As you can see here from this next report, the amount of negative equity that's increased in the first quarter alone, states like Louisiana, states like Illinois are starting to see that amount of equity increase, which means that, people are owing more on their properties in that case than it's worth. The amount of negative equity is going up in those states. So what does that really mean? That means if something were to go sideways, the housing market continues to change or continues to slow down, demand slows down, supply increases, whatever the reason for the change in the housing market, these are the states that you might likely see, issues in first, right? Because they have more negative equity building in those states. So, those states could have more foreclosures, whereas people in California, based on this information, actually have more equity in their property. So if things were to go sideways, they would be in a better position to sell their homes, not have to go through foreclosure, and come out with cash in hand at the end of that transaction. So, you can see here clearly some states have more potential issues than others. And at this time, there's really nothing to be concerned with. This is more just kind of giving you an idea of what the future could hold if something were to change. Now, as many of you know, I'm in the camp that believes that you're going to see a strong housing market for the next year, 18 months. I've been talking about that for the last year. I think this continues for some time just because of the anemic amount of supply and the high buyer demand. I don't think interest rates are going to go too far. I don't think inflation's really going to be an issue. And so I think you're going to continue to see a thriving housing market. But the last report I'll show here shows the 10 metros with the highest negative equity in the first quarter. You can again see Chicago, areas like Miami are gaining in negative equity in those areas. So, some of these markets could, change a little bit as time goes on, but chances are you're going to see supply stay low in most of these markets, which means, demand is going to stay there, and you're likely to see, at least a stable housing market, if not increasing at some point here in the future. So I don't think you're going to continue to see these 10, 12, 15% gains in most markets. It's going to be more realistic. You're probably going to see something closer to 4 or 5% over the next year or so, because I think you're going to see more supply come to the market. I think your demand's going to stay there. But as more supply comes, you're not going to have as many people bidding on one house, which means less people really bidding up that price because, when you have more supply, it gives buyers more options. They no longer have to get focused on one property and do everything it takes to get that property. They now have several options, which in my eyes, says that, hey, look, these people aren't going to just throw all their eggs in one basket and really, go way above the asking price in most cases because, they're going to have options to choose from. Now, you'll still have people that do that, but I don't think that's going to be the majority of people, which means home prices are likely not going to continue increasing at the pace that we've seen. But it's really hard to say, right? But, the video here was primarily done just to show you that people have equity in their property. So for those that are sitting on the sidelines out there, the camp that thinks that, the doom and gloom camp, the housing crash camp, whoever those people are, thinking that, when these different government programs you're going to start to see a huge change in the market. I would say think again, right? People have equity in their property, which is going to be a lot different than the 2008 deal. People back then didn't have the equity because they were allowed to get loans that had 100% financing, that had 125% financing in some cases. In many cases, buyers weren't even paying the interest on the loan. They were just paying a portion of the interest on the loan, which meant every single month outside of putting zero down, their balance increased. And so once homes stopped appreciating, that meant problems, right? And at the same time, their loans became adjustable. It was just a nightmare. Now financing is a lot different. People are in a better financial position. So I think that's why you're going to continue to see, a thriving, stable housing market for the next couple of years. But as I get more information on the housing market, on home equity data and foreclosure data and all of this data, I'll continue to put it out there. If you have questions for me, let me know. Put them in the comments below. What are your thoughts on the housing market, on equity? Is equity the savior for most people? Let me know your thoughts. But for now, I appreciate you taking the time to watch. Appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.